Hey, what's up, guys? I hope everyone's doing good. Welcome back to my channel. I know I haven't posted in a while, so for those who are new, I used to post some ICT setup videos on like Forex, like USD, JPY, gold, Euro USD, and then I just stopped posting videos. And the reason that I stopped posting videos is the reason why I'm making this video is I wanted to take a step back and get funded myself because I kind of felt like I was getting like responsible and I had an influence on people watching my videos, even though I made them by passion for trading and for study purposes. I told myself, okay, let me take a step back, let me get funded, prove to myself that I can actually trade, and then make a comeback on YouTube and really show how I got funded and actually help people become profitable, because I stopped making YouTube videos and really focused on my trading. Like some people might say, I really locked in. And yeah, now I can say that I'm profitable for at least the last few months. I don't know if this might change in the future. Hopefully not, but yeah, I'm pretty confident in my trading. So yeah, let's get into it. I made a little like Google Slides presentation. So yeah, here's my certificate. I got funded with my Forex fund. So what's up with me? I'm currently funded with a 5K account and I received my first payout. As you can see here, this is the screenshot that I put on the MFF Discord to say thank you. I did have some struggles getting my payout, but that was my fault. I requested my payout without having 10 trading days under my belt for that account. So my payout got requested and then it got denied, and then I had to place 0.01 lots for 10 days. Anyways, I finally got it and everything was smooth. So shout out to MFF. They are legit. They will pay you, and their customer support is not the best, but at the same time they do their best, and everything went pretty smoothly. So yeah, I wanted to prove to myself that I could trade. So yes, 5K is not a lot, but if you're able to trade a 5K account and be profitable and get a payout and not lose your account for a few weeks, few months, trading a 5K account is the same as a 50K, a 500K, a 5 million, or how much money you want. Risking 1%, all you have to know is that your risk management is, you gotta look at your account percentage-wise and not money-wise. So risking 1% per trade of your account size, doesn't matter how big your account is, percentage is percentage. So yeah, I might make more in-depth video on the risk management. Currently doing a 50K phase 1 challenge. And yeah, more to come. I will document this 50K challenge probably more thoroughly and give you more updates and show you my payouts more transparently, whatever you guys want. So yeah, let's get into it. So yeah, how I got funded, why you guys clicked on this video. I got funded trading ICT concepts. So I use the Judah swing. I use external and internal liquidity, like just the knowledge and understanding of it. I only traded one pair, which is the NAS 100, which is not a pair, which is an index. So yeah, I only trade NAS 100, and I'm currently starting to tap into the US 30, which is a pretty crazy pair, but has crazy moves super fast. I only trade between 9:30 and 10:30, so I only spend 1 hour a day on the charts. Technically, because yeah, anyone likes watching the charts all day long. And I use the ICT breaker blocks and market structure shift. So the big like core of my trading strategy is the Judah swing. And shout out to Phantom ICT on Twitter for this. He is a big promoter and advertiser of this concept. So this is what I use. So if you go on Google and you write Judas kind of means like trader, like fake. And as you can see here, this is an example from today. Today is July 25th. And the Judas is basically when the market opens at 9:30, the market flies and reaches for external liquidity that you can find on the 1 hour and higher time frames. So it reaches for old highs, old lows, and it reaches for fair value gaps on higher time frames. And this is your Judas. And then from there, it reverses and it does your real move from the day. So basically you can expect the market to, let's say it goes high on the open, and then it should give you a short opportunity, and then you can expect the market to keep going down for the rest of the day. So basically the Judas is like a big liquidity grab, and then the market goes and aim for external liquidity on the opposite side, so opposite bias. So if like on this example Judas reached higher, on the real move you'll be looking for a short. So when the market opens and your Judas goes up, your bias for the day is short. By the way, my strategy does not have a daily bias because I only spend 1 hour a day on the chart, so I do not care about the weekly and the daily chart. I'm just trying to see what the market might do in the next hour, and that's all I'm interested in. So yeah, my checklist. So my time is really important. I do not trade after 10:30. Also, I did not put it here, but on red news, if there's red news between 9:30 and 10:30, I do not touch the charts. I just look at the charts, but I do not press the button. I do not enter any trade. And external liquidity taken. So market has to sweep a old low or old high on the H1 time frame, or a old fair value gap on the H1 time frame. So how do I enter? My checklist. If I have my checklist, what is my entry? So I enter on a breaker block. My take profit would be on the opposite external liquidity. My stop would be above or below the breaker block and the breaker like high or low, depending on the side. My order is basically market. So I enter on market. So as soon as the candle closes and gives the market structure shift, I press the sell button. I do not wait for market to retrace to a fair value gap. I just enter on market. And I execute on the 1 minute time frame. So yeah, I'll give you examples. So this is what my entry model looks like if I had to draw it on a napkin. So basically a market structure shift that activates a breaker block is a market structure shift that before closing under that low, short-term low, it reaches and it raids the previous highs. So that is a breaker block activation. A normal market structure shift, the price would have came here, not go over here, and then close under. This offers opportunities, but price is most likely to retrace to this level and pass and keep going up. Just from studying and getting data, I realized that breaker blocks are really high probability setups, and market structure shifts activating breaker blocks are like one of the most accurate models you can find out there. So I would really advise you guys to go and just collect data and read the chart every day and see it for yourself. And yeah, I would put my stop at the high right here. So here's an example from the same chart I showed you previously. So right after your Judas, market created a low here, rated these highs, and then closed under it. And this is your breaker activation. So this whole block here is a breaker block, and it got activated. As you can see, market tapped into it twice and then decided to keep going down. And how I would enter is basically as soon as this candle closed, I would have clicked on sold. So my entry would actually be here and my stops here, and I would have aimed for this take profit here. And this line here would be my break even. So as soon as price taps here, I would move my stops to break even because yes, this is accurate, but you will not catch opposite external liquidity every day. These are your best trades. Most of the days, price will go down, respect your entry, respect your model, but price does not care about your risk-reward ratio. It will go down, grab liquidity, and if it wants to, even though it's not external liquidity, it might reverse on you and stop you out. So that's why I put my stops to break even. This is a better example from my journal, so sorry for the formatting, it's not the best, but this is simply how I trade, you know, like there's no fancy lines on my charts. I drew a line here from a 1 hour high, another one here. Market open, rated this one. As soon as it rated it, I'm like, okay, let me find a market structure that activates a breaker block. As you can see here, boom, closes here, entered on market, put my stops here, and targeted this and if I saw a little 1 minute fair value gap here, so I took 80% off here, and my final TP was here, which was like a 3.5 trade, this trade I believe, something like that. And yeah, like as you can see, like it's super simple, it's really accurate, and sometimes markets can just fly through take profit, sometimes it might consolidate, but yeah, like win rate is pretty high, and worst case scenario I get stopped at break even, but the market rarely like reverses on you as soon as you enter with this model. So yeah, any tips or whatever, or I mean pros and cons concerning my model, how I got funded. The cons is that since you're doing market entries and you're not really precisely calculating your entries, market might go up, go down a bit, and you'll be in drawdown. So you need a good like mental, and you need to understand that you got external liquidity, your breaker block appeared. So now your bias is that market will reach for that external liquidity on the opposite side. So you have to really understand that your bias is strong, and no matter how much drawdown, do not close your trade, do not move your stops. The only thing you have to do is move your stops to break even when price has moved a bit, but do not move your stops too early, or else you will get stopped out most of the time, or you might get stopped out at break even and then market might just fly to your take profit, which does happen to me a lot. And the cons of entering on market is that since you're entering on market, sometimes the price flies and gives you a big, like kind of a bad entry, I guess, and you might have some bad risk to reward ratios, and that is up to you as a trader to filter these out. If I don't have at least 2.5 R, I do not take the trade. It's not worth the risk for me. Pros is less missing the moves. Why? Because you enter on market. So a lot of times, if you tried the 2022 mentorship model where you enter on a fair value gap retracement, the price does not come back to that fair value gap. It does happen, and when it happens, it's really nice, but a lot of times it does not happen and you just miss the trade and you keep like pulling your hair out. And so yeah, that's why I switched to market entries. Mechanical execution. Why? Because as soon as the candle close, I enter. I do not think twice. And putting a buy or a sell limit really made me hesitate, because sometimes price went far, came back, and I'm like, when it's coming back, is it just going to stop me out or is it going to reverse? So I just enter on market, a lot more mechanical, no hesitation, like I just said, high win rate, and no daily bias required. So yeah, that is it for today, guys. I just wanted to make a quick comeback video on YouTube. I will make more detailed videos on my trading. I will start filming live trades on my 50k funded challenge. I might show you guys how I passed phase 1, all my trades, whatever. Let me know in the comments what you guys want to see. Let me know if you guys have any comments, and also go follow me on Twitter at FVGmoney. I'll post there some like motivational stuff, and I might post some charts. Like currently I have almost no followers, so I don't really post, but if I get followers and whatever, I'll start posting more. And yeah, you guys can message me there. I'm not too sure if you get how that works, but I think you can message me on Twitter. So yeah, feel free to message me or tweet to me. I'll answer. This might be the easiest way to contact me, or else in the comments. So yeah, thanks for watching the video. I think that's it. And yeah, until the next video, guys, take care. Keep trading, and yeah, let me know in the comments if you have any questions related to this video. So yeah, take care, guys.